Hello, welcome to JS Services Strategy Recap. Today we're going to go over a bull trend acceleration market state condition, and we're going to look specifically at a bull trend market state with the R level below the market or underneath the downside pivot. So we have this band here, so that's a unique structure for the bull trend, and that defines the lower trough that makes this statement of bull trend acceleration true. So bull trend acceleration, the market's produced a major positive technical signal. Is it going to follow through? If so, we'd anticipate to be more aggressive buying, or was it just a one-day event that produced the positive signal? We're going to have a corrective turn. So if we're in this bull trend acceleration market state and we have this structure, then these are the optimal and the hedge strategy themes. So optimally, the market's going to open up and we're going to get an opportunity to buy off support. So we're going to execute a buy R fade, and then we'll also look for an exhaustive reversal signal to jump back on this big positive signal that we've had. On our hedge strategies, if this market's going to break structure, we'll see a breakout above the upside pivot that the market can't hold. So the aggressive buying starts out and produces a new buy signal above this 130 and 50 level. Can't hold it, and we get what we call a sell UP reversal, which would target back down to either the downside pivot or the R level. And then if we get a failure from the R level, that would confirm a break in the bull trend, and that would signal a transitional trade. So here's an intraday chart. Here we can see the structure on the chart. Here's our directional and our upside pivot. The market is opening above the directional. Here's the downside pivot. So anytime we know that a market that's in a trending market, if it's above the directional, it should just start trending, and this market opens up firm, which makes sense. We had a big positive signal. We're opening up firm, and we're trading here, and the market starts to press into the upside pivot. So this is the hurdle for a new extension higher. Here we get a reaction. So a half a PMD reaction, and now we're getting a breakout signal. So I'm going to put some metrics on the market here. I'm going to take off these minor levels, and here's our variance. So we have a variance breakout signal, and we also have what we call an alert distance. And so this market broke out to the upside and produced a new buy signal. But one thing that happened here on this squeeze, it did hold market structure. So here's our market structure level, but it broke some of this price structure. So one of the tells that we know of this market state is that the market is holding positive price structure. That's a key tell that there's follow-through potential. And so if this market should be moving shorter pullback, shorter pullback, short pullback, short pullback, and then we have a big one. And so this is a bit of a tell that this statement of accelerating trend may not be true. It did hold market structure, so we're always watching price action within market structure. So the price action is a tell against this trend, and if this price would have come down here, that would have been a market structure break to confirm it. Now we have an upside breakout. We broke through our metric, and we confirm that breakout. And we attain a half APMD, and we come up to our CR plus level. So what's interesting to talk about at these levels is the real buying energy is down here. So as you're coming into this market and you're looking at what you want to do, and the market's trading at these levels, the buying energy is way down here. So the real opportunity is actually going to be a sell, because the market's a little extended. You had this big positive signal, you gapped higher, and you're moving higher, and now you're pressing the CRX plus. The CRX plus is an interesting number. We have our critical range, upside pivot, downside pivot. The directional is the midpoint of that critical range. And that structure breaks down like this. You have two minor critical range levels, a positive and a negative, and then you have a critical range extreme positive and extreme negative. And what will happen on a breakout is this becomes a good confirmation point. Absolutely, you get through your metric, your alert distance, or in your variance, and that's going to give you a trigger that you're breaking out above the upside pivot. Sometimes you'll do that and the run stops, but the market will exhaust, and it'll exhaust in front of this CRX plus. And then you'll start to fail, and you get a failure here. That's a good look back tell that this may be a big reversal opportunity because the market couldn't confirm that breakout. And sometimes when the market's trading really right at that level and the high of the day is pretty right on to the tick almost to this point, and you start to get some exhaustive signals or the market starts to stall out, you can, depending on the market state, you can have a kind of a short-term opportunity where you don't really have to risk much. And what if, even if you're just getting a half APMD back down to the upside pivot, it's money, it's a trade, and it's an opportunity. But understanding this condition, understanding this is how the structure works and what this CRX plus means is an important component. And so as you're coming into that variance and you've had this breakout and you've had this bull trend acceleration and you've had this awareness that the market really should have just continued to scale and it didn't. Maybe that was just a pause and now you're going to get back in and it's going to scale, so you anticipate a tighter pullback, and this thing should just go. And then here we get a break in momentum. So this is important. The market should be scaling higher, and at this point it's not. And so then we have to look at our strategy themes, and we have to look here and say, you know what, they held. Fact is, they held the CR plus. Fact is, they broke price structure here. Fact is, they're breaking price structure again. And here we're breaking market structure. So now we have a confirmed reversal signal. So now it's confirmed that we're in this hedge strategy theme. This optimal theme is over, and we're in this strategy theme. And how can we get on this theme? And what's our expectation? Well, our expectation is the market can come down here, or come down to 127.15, come down to this support band. And how can we participate in that opportunity? So I wanted to bring this down to a micro level so you can see you've got this price action here. You're breaking structure here, and you're coming through and you're breaking through the variance here. So you're getting a sell signal here, breaking price structure, breaking market structure, and as you come through the alert distance, you're getting a confirmation. So you're in a reversal. You're in sell mode. And then the market just starts to unravel. And this is normal. And so this should be anticipated. You have a big positive signal. You had a lot of buyers. You had them get involved. You gave them a fresh buy signal. And so using a hard stop below the market makes sense, because this thing should just run. And if it doesn't, this can happen. You can have this sharp move. And if you want to participate it, there's different strategies to use to enter on a reversal. One's using a hard stop. Another is waiting for a pullback. And you can use both. Everyone's emotionally charged here, and when they take that away, it's a big scramble. And this is what can happen. This is a bit of a textbook reversal that happens in a bull trend acceleration market state. So again, what JS Services is providing is the subtleties, really identifying these market state conditions and how the market likes to behave in those conditions. And it makes sense. You have a big positive signal, everyone's long. You give them another signal to get long at the top. They hold this. You have a tell right here for an opportunity to fade this move. And then here you have a failure and an acceleration. And the market pays out 2 full APMDs and more and attains the R level. And here it's no thinking. You have the trade vision. If you're getting this signal here, where can it go? It can go here. And that's what you're thinking as the market's aggressive here. And same here. Now you get a confirmation of a break in market structure. And another sell signal. And another failure, another sell signal, another full APMD. And you have that clarity. And you have that follow through. And then this turns into a big event. And again, it's something to be anticipated. It's a hedge strategy theme. You're always thinking textbook. As the market fails from the R level here, it gives you another opportunity to sell. So now you have this other strategy that's engaging. You have a sell R breakout. Again, we're not thinking. We're looking at what's happening. What's price action doing? Well, it's building aggressive structure. What can happen in these accelerated trend states is just as they accelerate to the upside, they can accelerate to the downside. And so you have that. You have this accelerated move. And that's common in these accelerated trend states. You have this big positive technical signal, and you get a counter signal, a counter trend squeeze. And that's your expectation, is this real aggressive action, and you're getting that. And so now they're failing here, and they're confirming a downside breakout. They're breaking below the CRX minus. So you had the DP failure here, a DP failure breakout, confirms through the CRX minus, which is the R level, and then they give you another sell opportunity against that figure. So they're stair-stepping this market structure, and price structure is holding negative, and then they pay out, a PMD and a half. The Russell 2000 is in the same state with the same structure as the coffee market, with the same strategy themes. But it behaved differently. But what do we know for facts? We know for a fact that in a bull trend acceleration, if that market's going to follow through, it's going to hold this aggressive structure. That's the key tell. That's the key tell for follow through. If it doesn't look like this, there's something wrong. And with the structure below the market is somewhat of a tell that you get a break in structure, especially at the directional. You get above the directional, it should hold and it should go. And if it doesn't, you could have a corrective trade. And that's what happened in the Russell. Opened up right away. It's struggling. It's trying to build some momentum and it can't. I'm going to throw the minor levels on here. And so here you get a break in market structure. It shouldn't do this. At this point, you know this is not true and you're in a hedge strategy theme. And the market's going to try to make a play for the R level. Or you're going to have a digestive trade. And they kind of do both. They take it out here, they confirm this is not true. And they do this a lot. They give you this big head fake. And they give you a rally, they make new highs, but they're making a new high in front of structure. And this happens a lot. You'll see a market that'll come, it'll put a lid in here, you'll get this head fake or going lower, and this really confirms that this hedge theme negates this. Then you have this sharp rally into structure, reject, and then you have another downside breakout in the directional, and the market tries to make its way towards the R level. So basically a messy day. We didn't get our clean reversal signal to the upside, so you don't have that same energy that we had in the coffee market. So the market performed to expectation because it broke structure here. It should never have done that. It should have just scaled right from this level. It should never even gone below this figure after it came above the alert distance. The Aussie dollar is another market that's in the same market state, has the same structure, and same strategy themes. Now there are different nuances between market color analysis and this one. If we look at a bull trend acceleration, one thing that stands out is the ADX is brown, and a brown ADX means it's in neutral, it's not trending, so that indicator is either trending or not trending. And when we're in a trend move, it's nice to have a purple ADX because that signifies that the market has trending ability, and this market does not. So always focusing on the facts. Fact is we're in a bull trend acceleration. Fact is sentiment's below the market. Fact is the market opens up above the directional. Fact is the market should start to scale higher. It should start to work positive momentum. Starts to digest and you get a positive surge. Falls just shy of the upside pivot metric. And then here you're breaking price structure below the variance. Here you're confirming that break in price structure. So here's your higher move lows, and you get a failure from one low, you get a failure from that low below the variance metric, and then you get a confirmation below the alert distance, confirming that this state's no longer true, and we're in a hedge strategy theme. And when we're in a hedge strategy theme and a corrective trade below the directional, where can it go? The market can break down to the R level. Put the minor levels back in here. And so here's our failure signal. The market now the market starts to stair step down, and it's working price structure and market structure down until it attains its target. And then here we get our price structure break, and we're getting a market structure break at the same time. And it tells you that this is over. This momentum's over. And so what should we anticipate? The market to bounce back and turn a little bit. So it's always watching price action within market structure in the context of the market state and the inherent strategy themes to give you clarity so you can anticipate the market's next move. For more information, please contact us at info@jsservices.com. I look forward to working with you.